Hello, hello. It's good to see you. Have you heard of Warren Buffett's 2 rules on investing? Well, rule number 1 is never lose money. And rule number 2 is don't forget rule number 1. And preservation of capital is just as important as accelerating your wealth. And it all comes down to the strategy. My name is Tommy Brandt. I'm with TEB Capital Group. We invest in commercial real estate assets with a primary focus on apartments. And speaking of strategy, today we're going to be talking about 3 strategies for investing in apartments. Let's get started. The first strategy to investing in apartments is called core investing. This is typically an asset that is already stabilized. Think of an A-class apartment complex that is a high-end asset with high-end amenities. You typically have a high-income tenant base in a very desirable market. This is where you typically get some cash flow with a little bit of appreciation. It is low-risk investing with low to moderate returns, but it is a safe place to invest capital. Typically, the investors here are more institutional investors that are looking for a low risk channel to invest their capital in a multifamily asset. Moving on to the second investment strategy in apartment complexes is called value add. This is where we are taking a mismanaged asset, something with a lot of potential, and transforming it into its highest potential asset. And it's called value add because there would be an opportunity to add value through the net operating income of the property, or NOI for short, through interior renovations or exterior CapEx projects, maybe adding some amenities to build a community, making it more desirable and safer for the tenants, quite possibly some operational efficiencies. And then you are taking the current rental rates and raising them to market rates for the product that you've created, all with the intent to increase the net operating income. And with this one, you will typically get moderate cash flow and moderate appreciation, but expect the stabilization period to be what makes or breaks the investment. After stabilization, you have moderate cash flow, and you should be able to enjoy that moderate appreciation that you've injected into the property. I would classify this as moderate risk with moderate to strong returns after stabilization, and depending on your market, of course. Moving on to the third apartment investing strategy, and that's investing in distressed assets. So you can think of distressed investing as value add on steroids. With a distressed asset, you're typically coming into an asset with low, maybe even no occupancy at all. The entire place could be vacant. And so the investor has to solve the problem of the property, whether that's major renovations needed on the interior, exterior, or maybe it's just simply marketing. It is extremely risky because you're starting out not being able to afford the debt service on the property. This is a situation where there's typically low to no cash flow, but a lot of appreciation on the back end of the holding period. It is a high risk profile with a high return. And that is 3 investment strategies for investing in apartments. The last thing you really need to know here is that you need to match your investment strategy with the team that you're cultivating to investing in apartments. So marrying the partners with the experience of these strategies with the investors that have that appetite for risk is a little bit of an art. I hope there was something in there that was valuable. If there was, be sure to like and comment on the video. If you haven't already, be sure to subscribe to the channel. And if there's someone in your network that you think this video would add value to, you have my permission to share the video with them. And if you're like me and you enjoy real estate investing, then feel free to check out the other videos on this channel. Thank you so much for stopping by. Have an amazing day. We'll catch you on the next one.